What's up everyone, my name is Olive. Welcome back to my world of stocks. In today's video, we're welcoming any new subscribers to the channel who may be very interested in owning and investing in stocks, but that are still really new to the market and consider themselves beginners when it comes to stocks. But don't worry, because today I'll be explaining exactly how stocks work. We're going to run through how to choose the right ones to invest in, how to actually buy them if you've never done that before, and I'll even run through some of the strategy and mentality that you should have when buying stocks, and I'll even give you some tips and advice specifically for beginners. But on top of that, and this is probably the best part here, is that I'm actually going to link for you guys some bonus education videos that I've made. I'm going to link them for you down in the description. So throughout this video, as I run through any topics, I'll give you a quick explanation of them. But if you want to learn more about these topics and you want to dive deeper into them, you can go down in the description, click on a linked video. I'll refer you to them as I run through it, and you can click on that video and you can dive much deeper into that topic. These videos will be focused entirely on these individual topics. So I think this video here is going to be a great source for any beginner in the stock market, and I think this will really set you on the right path for long-term success with investing. You can come back to this video and you can click on those bonus videos, and it's going to be just a great source of knowledge here when it comes to stock market investing. So I hope you're as excited as I am. I can't wait to share all this information with you guys. I think it's going to be a lot of fun. I think you're going to really enjoy it, and you're also going to enjoy the bonus videos. But with that said, let's not waste any more time here. I did put timestamps for you down in the time bar here, so if you want to jump to any specific part, you're more than welcome to. But with that said, let's go ahead and start with just a quick intro into how stocks work, and then we'll get a little more complex as we make our way through this video. So let's just jump straight into it. Okay, so let's just run through a few basics here in case you're completely new to stocks. Now, stock is just ownership of a company broken up into shares. So if there are 10 shares of Microsoft stock and you happen to own 9 of them, then you basically own 90% of the company. And the value of these shares, also known as the stock price, goes up or down based on how good the company is and thus how much demand there is for owning it, which is measured by various things like how profitable the company is, or how fast they're growing, or how strong their brand is, what their future potential is like, if they pay a dividend, different things like that. And by the way, in case you don't know what a dividend is, that's just a payment that the company gives out to shareholders as a reward or incentive for being an owner of the company and the stock. Keep in mind though that only some companies pay dividends, and it's usually the larger, more profitable ones that can actually afford to pay out those dividends while still being able to invest money back into their business at the same time. Usually younger companies won't do this because they're desperately trying to grow, and thus they have to invest all of their money back into the business. They can't afford to be paying out dividends. Okay, so we know what stocks are and how they work, but how do we go about choosing the right ones to invest in? Well, the most basic things you want to look for is how strong the company and the brand is. Do they have any growth or future potential? Is the stock price cheap or expensive? And if you happen to be interested in dividends, then obviously you want to know if they have one and how good of a dividend that is too. Well, let's run through a few examples here just to make it easier. Now, starting with the company's strength, a great example of a strong company, I would say, is Google. The technical name of the company is Alphabet, but I always just call them Google. But not only is their brand recognized all over the world with products that dominate their respective markets, like for example, Google Search being the most used search engine in the world at over 90% market share, but they also generate giant sales and profits every year, doing over $250 billion in revenue sales and over $76 billion of net income profit just last year alone. I would say that Google also checks the box for growth and future potential, as they grew their sales by over 40% that year and still have tremendous future potential in all kinds of different areas, especially artificial intelligence and cloud computing. And really, I think we'd all agree that Google will only become a larger and even more dominant company over time as people continue using Android phones or the Chrome web browser or Google Maps or Gmail, and the list goes on of all the different products and services that they have. But despite all those amazing qualities as a company, I would also argue that Google even checks the box for a cheap stock price and valuation too when compared to the rest of the market. Now, if you're a beginner in the market and don't know much about stock valuations and how to determine whether a stock is cheap or expensive, then I highly recommend you watch my How to Value Stocks video, which I'll link for you down in the description. But just to give you a quick idea of how this works, you need to know that the stock price is not what actually determines whether a stock is cheap or expensive. A $100 stock can still be really cheap, while a $10 stock could still be extremely expensive, because it's only when you factor in what you're getting in return for that price that you'll know if it's cheap or not. And this can be measured by a ton of different factors, including the strength of a company, the growth potential, the brand, and especially their sales and profits. But one of the most common valuation metrics that people use just to get like a really quick idea of whether a stock is looking cheap or expensive would be the price to earnings ratio, also known as a PE ratio, which compares the stock price in relation to the company's profits. And to check this, I would highly recommend using a website called Seeking Alpha, where it not only shows you the PE ratio of a stock, but it even compares it to the respective sector or its peers. So I'll guide you through this really quick. Just go to the website, type the ticker symbol for Google stock, which is GOOGL, then click on the valuation tab, and then I would look down at the PEG ratio, which not only tells us the price to earnings ratio, but it even factors in future growth estimates as well, which in the case of Google, their PEG ratio is actually 20% lower than the sector median, meaning Google stock is actually cheaper than the sector based on their current profitability and their future growth. And I can make this really simple for you guys. There is absolutely no way in the world that a giant behemoth dominant company like Google should ever be trading cheaper than the sector on such an important measurement like the PEG ratio. So in my opinion, it is a fantastic value at this price right now. Remember, the fact that an individual share of Google costs almost $100 means nothing. It's what you get in return for that price that really matters. And again, if that's a little confusing or you want to learn more about valuing stocks accurately and effectively, then just click on that video I linked for you down below. It'll explain everything. Now, having said all of that, while Google stock may seem like a great choice for anyone wanting a solid company with good value and good growth, it's really not a great fit for a dividend stock because, well, it simply doesn't even pay one. So if that's specifically what you're looking for as a dividend, then you'll have to find some other stock to fit that need. In my case, I own several different dividend paying stocks, and I'll link for you another video down below that goes through my entire portfolio and shows you every stock I own, including dividends. But just to give you some of my favorites right now, I would say that the telecommunications giant Verizon, who pays about a 6.5% dividend, is a great choice, as well as the medical device company Medtronic, who pays over a 3.3% dividend, and the biopharmaceutical giant Pfizer, who also pays about a 3.7% dividend. And by the way, if you want to learn more about dividends, I will also link for you my video that explains everything to do with dividends down below as well. And having said all that, I also just want to quickly add that at the end of the day, it's really all about balancing out your portfolio with several different types of stocks, because no individual stock will ever be perfect, and that's okay. Some stocks will have more value, some will have more growth, some will pay a dividend, some won't. Some companies will be very large and dominant already, while others might be new startups that still have to prove themselves. Some companies might be, skyrocketing and doing great, and others might be struggling and their stock price is low, so you want to bet on that because you think they can turn things around in the future. There's all kinds of different moves and plays you can do in the stock market, but the point is that it's okay to own a little bit of everything and to mainly focus on having low risk, but also maintaining some upside potential for the future as well. And I will just say though that, and this is especially the case for beginners, but I would say this really to everybody, it'd be a great idea to really start out with a core group of very large, very dominant companies as a core foundation of reliable stocks, low risk stocks, to build your portfolio around. And you can add on additional stocks over time that might be a little higher risk, maybe have a little more upside potential, but carries a little more risk. But to start out, go with something low risk, high quality, companies like Google or something like Microsoft or Amazon, companies that you know are very dominant and are likely to continue dominating in the future, that you know and understand their products. You might use them yourselves, and therefore it's easier to understand their business. Start with that core foundation of group of stocks first, and then build on that later. And if you want to know more about how to build the perfect stock market portfolio, I'll link for you down below one of my educational videos where I talk all about how to structure a stock market portfolio. And I think that's a great video. I highly recommend it, and I'll have that for you down below in case you need it. Okay, with all of that said, let's talk now about strategy and mentality, because this is where I feel that beginners in the stock market make the majority of their mistakes. They come in without the right strategy in place. They make a lot of mistakes. They overwhelm themselves trying to do too much at once, and they usually end up panic selling for a loss, and that scares them away from stocks, and they run away and they never come back. And I see it happen all the time, and I hate to see it happen. It's a real shame, because investing in stocks is actually really easy and anyone can do it. So nobody should be afraid of it. So that's why I want to help you guys now with some strategy. And to simplify it, I'm going to break it down into 5 easy, quick tips that I'm going to give you if you're a beginner for long-term success in the stock market. So let's run through my 5 tips right now. Okay, number 1, stick to larger, profitable companies that you actually know a lot about yourself, or that you use their products or services so that it's easier to understand the company's products, their business, their competition, and their future potential. It'll really make things easier for you, and it'll be a lot easier to research them and know all about them. Number 2, remember that valuations matter. Don't throw your money into really expensive stocks just because you like the company. Use websites like Yahoo Finance and Seeking Alpha to see how their financials are performing, and then compare that to the share price. And again, check out my video on valuations to learn more. I highly recommend it. Number 3, stick to long-term investing over short-term trading. It'll lower your risk, lower your anxiety, and simplify everything. It'll keep you focused on the long-term picture while getting past all the short-term noise and volatility of our current macroeconomy. As a long-term investor, I focus on owning good quality companies for many years into the future. And while short-term traders constantly move in and out of stocks, or may scream about a recession every year or panic over any short-term news, I simply focus on buying good quality stocks at cheap prices to hold long-term, even if it's during a market sell-off. In fact, I actually do most of my buying while everyone else is panic selling, because that's when I get some of the cheapest prices ever for some of my favorite companies and stocks. That does bring me to number 4, though, that you should still be very cautious and diversify. There is nothing wrong with taking your time and being sure about your actions. Stocks are not going anywhere, guys, and there will always be opportunities to invest. So don't buy a stock immediately just out of fear of missing out. If it skyrockets, hey, you could still invest in it, but you could also just simply wait for it to dip again, or you could look for a different stock that you think is on sale and at a better price, because there is almost always something that is worth buying on sale in the market. As long as you take your time, diversify your portfolio with solid companies, and invest with money that you don't actually need, then you're most likely going to do great over the long term. And by the way, always invest with money that you don't actually need. Never spend rent money or emergency money on stocks. Trust me, it's not worth it. Focus on having a good job with reliable income, put money aside into your emergency savings account, and then invest in stocks. If you're not prepared to lose that money, then don't spend it. It's really that simple, guys. It's really that simple. And finally, number 5 is to have fun and enjoy the process. Don't be scared of it. I can tell you right now that if you don't actually enjoy investing in stocks, you're going to be much less likely to put in the work and do the research necessary for picking good stocks. So relax. This is fun. You're becoming a part owner of some of the largest corporations in the world. You should be proud of that. Have fun with it. You're a businessman or a businesswoman that is acquiring other companies. That's super exciting. You should brag about that. It's crazy. Like, it's honestly one of the coolest things in the world that you can literally be a part owner of Amazon or Microsoft. So take your time, be proud of yourself, and have fun looking for new and exciting companies to invest in. And just know that you're gonna make mistakes. We all make mistakes. I still make mistakes with stocks. Nothing in life is perfect, so don't let the bumps in the road scare you away from investing in stocks. If you stick to these principles and you have the right mentality in place, you're almost certainly going to have long-term success in the stock market, and I really do believe that. And if you want to learn more about my overall strategy, I'll link another video for you down below as well. All right, guys, we've now talked about what stocks are, how they function, what type of stocks to look for. We've talked about having the right strategy and mentality in place, but how do you actually go about physically buying a stock in the first place? And what's funny is that this is usually the scariest part to most beginners, but it's actually the easiest. It's very simple. All you really need to do is get a stockbroker who helps you with the entire process. And a stockbroker is just a company that will have a website or a mobile application that you can use for free to purchase and sell stocks, and it helps you manage your entire portfolio and handles all the messy stuff for you. And there are many brokers out there. There's companies like Charles Schwab and Fidelity and SoFi and countless others. I personally use Robinhood, E-Trade, and M1 Finance. However, I would not recommend using multiple brokers at once, especially if you're a beginner. I would say just get one for now and keep it as simple as possible. Now, I'm not personally sponsored by any broker at the time of this recording this video, at least. I'm not sponsored by any company, so this isn't biased information, but I would personally recommend Robinhood for a beginner, just because it is the most user-friendly platform that I've personally seen out there. It's very simple to use. All you have to do is download the mobile application. It then guides you through the whole setup process. You're going to enter your personal information. You're going to link your bank account, like a checking account or a savings account. And from there, you can transfer money to and from your Robinhood account, which will be used for stocks. And then you can just simply click on the search button on the application, type in whatever stock you want to invest in. It's going to give you some information about it. From there, you can click buy if you don't already own it, or if you do own it, you can click on sell and then just enter whatever amount of money you want to buy or sell. And the cool thing about Robinhood is that they also offer fractional shares, which not every broker out there offers. So that's a great feature that is included with Robinhood, and it's free. And fractional shares is a way to purchase a stock for a certain dollar value rather than an actual whole share. So for example, Google stock trades for, I think it's like around $100 a share. Well, say you don't have $100 at the moment, you only want, your investing budget is only like $20, but you want to buy $20 worth of Google stock. You don't have to actually buy a whole share of Google. You can just buy $20 worth by just putting in $20 as your purchase, and Robinhood will basically take a share of Google, they'll break it apart into fractional shares, and they'll just give you $20 worth of that stock, which is a great feature. And again, not all of brokers offer it, but Robinhood does, and I would definitely take advantage of it if it's something that you need. And when it comes to dividends, those will just be automatically deposited into your Robinhood account, which you can then use to purchase more stocks, or you can just withdraw it, send it back to your bank account if you'd like to do that, or you can just leave it in there as cash. And I believe Robinhood also pays you some interest on the cash that you have in that account too, which is pretty cool. Again, all of that is free. And then when it comes to something like taxes, with taxes, Robinhood will send you a PDF electronically that you can then use to file your taxes, and it's very easy stuff. And if you use like an online tax preparer like TurboTax, for example, I believe you can even import your taxes directly from Robinhood into TurboTax, which is also a cool feature because it handles all of it for you. If you want to know more about taxes when it comes to stocks, I'll link another video for you down in the description where I cover taxes with stocks too, in case you need that. Anyway, I think that's going to just about do it for today's video. Now, I just want to say, if you have any questions at all, drop them for me down in the comments section. This video is meant to be like the all-inclusive, like perfect, place to start for beginners. So I want to make sure I answer you guys' questions. If you have them, leave them for me down below in the comment section. I'll answer them. And if you're also just kind of looking for various questions, you can scroll down through the comments, look at what other people are asking, and you might gain some more knowledge that way too. So anyway, I hope you enjoyed the video. And if you did appreciate it, please just do me a favor, subscribe to the channel because we talk all about stocks. You're going to gain so much knowledge. It's going to be a ton of fun, and we'll be investing in stocks together. It's a great thing to have. So you can subscribe to the channel, and you can also hit the like button. Those two things really help me out a lot, and that's all I ask for. So anyway, thank you so much for everything. I hope you're all doing well. Good luck on your journey, and I will catch you in the next video. Take care, my friends. Bye-bye.